Hello and welcome back for another GRT price prediction update, and in this video I'll be diving deep into the technical analysis here on the GRT chart. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And at the time of this recording, GRT is holding above the 20-day MA here on the 1 hour chart, which is now acting as support for us to continue gearing up. And in my previous video, I also shared with you that I was expecting a lot of volatility yesterday as a result of the CPI data, which came out being positive. And as a result of that, we saw a bit of a short spike here on the prices, where we made a high at around the $0.1021 mark. Then after the CPI, we started a bit of a pullback to the lower side. And at the time of this recording, you can see that we are trying to get back above the 20-day MA and continue holding above it. And today is another very important day where I'm also expecting a lot of volatility. And that is as a result of the PPI data and the FOMC meeting. And as a result of these two fundamental news, I'm expecting a lot of volatility once more, where we could see GRT get above the $0.1021 mark, which is the high that we made yesterday, in case the fundamental news has a positive impact to the market. And in case it has a positive impact, then we can expect to see a break above that those highs on the charts and possibly get above the $0.11 mark once more. That is what you can also expect on the GRT chart. On the worst case scenario, in case the PPI and the FOMC meeting has a negative impact, then we can expect further breakdown, where we could maybe even get a reset of the low that we made last week at around the $0.08884 mark on the worst case scenario. That is a move that we also need to have in mind in case there is a negative impact. And GRT has also continued to obey the Elliot structures. And jumping to the 4-hour chart for further analysis and to give you my Elliot analysis, you can see that after seeing the December lows, we started a 5-wave move to the upside, where we picked in that wave 1, giving us a high at around the $0.2325 mark. And after seeing that high, we started a corrective structure in the formation of a larger Elliott wave count 2. Minimum target areas highlighted on the charts using this red target area, where we have been breaking down, obeying this ABC corrective structure, where I have been terming this as the wave A, then a wave B. And we saw that one more leg down in the formation of that wave C, fully maximizing our red target area that I came up with by connecting the fibs from the low of the first wave to the high of that wave 1, giving me a minimum target area between the $0.1431 mark and the $0.0922 mark. And since we have fully maximized that target area in the formation of this wave 2, very soon I'm expecting GRT to start an impulse in the formation of a larger Elliott wave count 3. And to confirm to us that the low for that wave 2 is in and the start of an impulse has now started, I'm expecting GRT to give us a 5-wave move here on the charts, followed by an ABC corrective structure. So in case we see a 5-wave move here on the charts, followed by an ABC corrective structure to the lower side, before we can continue gearing up, that will be enough confirmation that the low for that wave 2 is in and the start of an impulse in that wave 3 has now started. So that is what I'm expecting on the GRT chart on the long-term point of view and on the short-term point of view. And remember, today we are expecting a lot of volatility as a result of the FOMC meeting and the PPI data. Also taking a look at the indicators on the RSI, we are trading at around the 47 mark. On the MACD, we have been able to print a bullish cross, fully supporting higher prices. So let's be patient and see how that plays out, and I'll be keeping you updated.